Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to the AJ Brown Show, episode 158. My name is Cyprian Francis, and with me on the move this week, Mr. AJ Brown. How you doing today, AJ?
Simply amazingly wonderful, Sip. Thanks for asking.
On the move with a mobile setup, strategies so simple that you can, take a
Wherever you
vacation
are.
during the week and, check on some of your things. Last week, the big news was President-elect Donald Trump, maybe the Trump trade with the S&P getting over that 6,000 mark like we talked about. This week, we're starting to retreat a bit.
As we had forecasted.
And that's essentially the profit taking. Is that what you would categorize, or what else is kind of driving the pullback that we're seeing? We're still high on an annual basis, but not as high as we were
Absolutely.
last week.
No, I mean, I mentioned a term that I use with my program participants last week called transient external stochastic shock, right? And that simply means that something that's short-lived, usually a news clip, comes entices a whole bunch of money to get thrown into the markets, and then it's as soon as and it's external. It's not something from like internally market generated, not good company results or something like that. Something external causes folks to jump on the bandwagon, react to the hype, throw their money into the markets, and then as that news headline is more and more in our rear view mirror, then some of the market movers come in and start to take that profit, and so it brings it right back down.
So I just pulled up your S&P chart because
Yeah.
I do love to first see if your indicator gives us any signals, any triggers, and it looks like it has. We did discuss that 6,000 mark as being a very critical level, kind of set up there for a couple days, but we're definitely, pulling back, and we did a good retracement analysis last week, and I guess maybe that 5850 might be kind of the next level you're looking at.
Yeah, absolutely. So, I mean, there's some other type of levels as well. Let's actually zoom in. Let's jump into this analysis just very quickly. I'm going to turn on my magic marker, which I always fail to do before the show starts. But yeah, we've got this ascending level of support, and that's assuming that our uptrend holds up. Which, for if there's any other thought on in the horizon, it should, because if you look back to when this uptrend started, and I know we're jumping in early on kind of this technical analysis or this retracement analysis, but we have a very mature uptrend at this point, meaning we've got 1, 2, and we're coming up with 3 tests of resistance, and we've got 1, 2, 3 tests of support. That means that our trend, no matter whether it's up, down, or sideways, is considered mature. The more times it tests those levels of support and resistance, whether they be going up, going down, or going sideways, that creates a more mature trend. And then the other thing is the levels that it does. So in this case, every time we go up with an up move, that's called a range expansion move, we go enough up that it's considered an ideal uptrend. And we've already had a few of those. And then every time we pull back, and the nerdy academician term for that is a range contraction, we contract right to that zone that we want to. So this is considered not only a mature trend, but an ideal uptrend. So there's no reason to believe that that level of ascending support won't hold, but we always have contingencies for if it will. So first of all, today we're getting a very clear signal that on November 11th, that was Monday, we hit our high. That's going to become our top reversal. We'll wait till the end of the day to lock that in, but it looks like November 11th is going to be our top reversal. So now when we throw our rulers on there, let me go ahead and bring back my ruler view. We'll pull back and we'll see where we go with these next pullback. If we go to that zone, like you said, just a little bit north of 5850, maybe 5900, fine. We're going to continue to subscribe to the uptrend. We'll do swing trading. We'll do directional trading, trend trading. If there's any sideways channeling, we'll collect premiums. That's where we'll be. If it starts to pull below, and the magic number is going to be about 5,700. If it starts to pull below 5,700, we're going to start thinking, hey, we're going to get back into some sideways channeling for a while. And I've been talking about that for a while, that the market is overdue for just some sideways movement for a while. And then we'll also watch probably this 5,550 or 5,600 level, because if something happens and we go below that level, we're going to start thinking trend reversal. We're going to start thinking market sell-off and things like that. And when we get into the maybe after the commercial, after we talk a little bit about current events, I'll give you some reasons why I think maybe this time around or the next set of reversals around, we may want to be ready to do some trend reversal trading.
Yeah, and it seems as if there is a lot of news coming out because heading into the election, obviously we got the election pop, but this week he's starting to assign cabinet roles, which it looks like are having an effect on specific industries. I know yesterday RFK in like the health sector and a bunch of these pharma companies just got hammered. And then I know before the show, we were talking about the potential of the EV credit. So the discussions are starting to have an impact on an industry, which are leading an index in a certain direction. And we still have some economic news that's coming out. So there's a lot more going on than we usually see that's having an impact. Are any of those in your mind? Like the RFK one, I think it did move pharmaceuticals a lot, but does that add up from your perspective?
I think there's some even deeper things than just these little, again, every time a news headline hits the mainstream media, like these cabinet assignments, which yes, they're going to have an impact, but not really until they're assigned. So I group them into that bucket of these are going to move the markets just for a flash as long as they're in the news, the transient external stochastic shocks. So yeah, are EV incentives going away? I saw Tesla got hit big time at the announcement of those, but they're not away yet. So, if they do or they do not, that could affect Tesla stock. But a lot of these transient external stochastic shocks, I think we have to get used to them, mainly, because this particular administration really likes to take advantage of the news cycle. And so I remember 2016 to 2020, there was always something coming out, whether it was a tweet or something like that, to kind of rile up different groups and different investors. So we'll see what happens, but there's definitely some deeper things. Let's delve in to some of the headlines, especially the economic news, right? Because we thought that inflation was pretty much tamed, and I still think it's for the most part tamed, but we got some interesting reports. Should we dive in?
Yeah, of course. Inflation, I think, is at the top of the list with the CPI. Is that correct?
Yeah, so people were starting to get worried, and then Wednesday came around, and we got our CPI, and the CPI wasn't that bad. Now, the CPI isn't really what the Fed uses in order to determine monetary policy. I mean, they take all their data sources, but the big one that they look at, and it comes out, I believe, next week, if not next week, the week after, the personal consumption expenditures report. But the CPI, which is a good indicator of retail inflation, I mean, it came in as expected, which was a little bit on the warm side, right? This, when you factor out food and energy, this number right here, this 0.3% number, we kind of wish it was 0.2%. So it's running a little bit on the hot side, but it is what was expected. So, as soon as the CPI was released, people took a breath of fresh air. Then we got producers price index. I don't even have to pull it up. Producers price index didn't show much change there. But here's the one I want to take a look at. And this was this morning. This is retail sales. Man, retail sales. So first of all, let's look at these September numbers. This is the numbers that were reported in September. And you can see the retail sales number overall. And then the next line is if you factor out vehicles, because really automobile sales is its own thing. And so if you and it's such a big component of overall retail sales that if you want to get just looking at retail sales, you got to factor cars out of it. And then the next big one to factor out of it is the purchases of gasoline, right? Because gasoline, yes, it's a retail thing, but it's also kind of a necessity, right? Because people rely so much on transportation to get to their workplace. So it almost makes sense. And that's why they have the retail sales report split out like this in those three lines, like you can see here. So in September, you can see these numbers. Well, they always go back with the retail sales report and they make sure they got it right. And you can see that they kind of got it wrong in September. Retail sales was up much higher than expected. And when you factor out vehicles, I mean, all of these numbers are pretty much double what was expected. So consumers are out there buying. I don't know, supposedly inflation is supposed to be keeping, consumers from not buying. And yet consumers are willing to pay these higher prices is what it's telling us. And then now we look at the October numbers and you can see there was an expectation that retail sales would have kind of tamed a little bit, but no, they were pretty high. But then when you factor out vehicle sales, I mean, they were actually on the low side. So cars are kind of going crazy for this month of October. There's been a lot of car sales. I don't know if it's because of sales or what, but I think we need to pay attention to the retail sales report because I think the Fed is as well. Should we move on and let's talk about this?
I actually have a pretty, I saw a pretty good chart on the retail sales. And like you mentioned, October, this big blue jump is retail sales comparable to everything else. And that's a big jump. And so I guess the consensus is our retail sales are not as strong, but buying cars is still good. A good
and not
barometer.
Only that, I think that October, I don't know if you noticed, but firms have been putting, we've been having sales. It's like they started Black Friday things a month early, if you haven't noticed. So I think sales are on, meaning not sales in general, but I think people companies are discounting stuff, so people start buying. So maybe this might be a short-term pop as people take advantage of these incentives. But there's definitely, the consumer is strong, especially in the car world.
I did have another chart real quick that I could pull up.
Show it.
That's the 90-day delinquency on loan types, and credit cards are like 11%. And so I can't imagine that's going to go down the next month and a half during the holiday season. And I don't know what the ramifications are, but this is usually one of those where we're spending money we don't necessarily have, and I
Mhm.
don't know who benefits from this, but this stuck out to me as like something that maybe is on the horizon that could stir up the pie in
Backfire.
the future. Yeah.
Yeah. Yeah, we
Um,
need to watch these things. But I also wanted to say the Fed has been, you and I have talked in the past about the three ways that the Fed controls monetary policy. Number one, they play with the short term interest rates, right? Number two, they have this whole quantitative tightening that you and I like to talk about, but rarely gets the light of day. And then number three is just them talking, right? And them telling people their thoughts, because then people interpret their thoughts and make decisions based on that. So there's been a lot of talk this week from members of the Fed cabinet saying that, hey, inflation might be under control now, or it might be something that we don't need to drop more rates. You'll notice I've got up on the screen our CME inflation like rate probability chart for the next rate move. And last week we were talking about how it had dropped about 20 points. It's now dropped 30 points. In other words, there's less and less belief that we might get another rate drop in December. Instead, the Fed may hold. It's now still a little bit. It's about, right now I'm looking at it 58% towards there will be a quarter point rate drop versus 41.3% that there won't be one. But that number's been, aggressively coming down. Just a month ago, the belief that there was going to be a rate drop in December was like at 87%. So the fact that this is coming down so quickly puts it on the line as, is the Fed done for now dropping rates? Some folks are even wondering if the Fed might be thinking about starting to raise rates again. So there's some things going on.
so that means that a hold is on the table more so than it was last week. And
Big time.
do you think that would be concerning, or is it justified that, hey, we've been raising for I don't know how many quarters and we finally brought it back down, and do we want to keep bringing it down, or we're like kind of okay at this level? Let things work out. Let some sales creep up. Let the inflation pull back. What are your thoughts on where would you like to see the level kind of, for us to be on the rate side?
Well, if the Fed wants 2%, right, you would think that things would be under control if they could get it down to 2%. The fact that, it's at what, 4.5, 4.35, 4.75% right now, they're tightening. They're trying to get it to come down to 2%. Ideally, everything would just stay at 2. The interest rate would be at 2. And it's at 4.75. And like I said, they want to hold it there, which means inflation is still too fast. That means your prices are still going up. And the fact that there's rumors and that they're starting to talk, and the rumors aren't just economists, the rumors are coming from the Fed, the people who make these decisions, that possibly rates could start to go back up, means that they don't have inflation under control like we thought. And that's never a good thing, because, that was the reason why big decisions were made a couple weeks ago, was that inflation was too much. Well, to know that it won't be solved, is kind of disheartening. So we'll go from there.
Yeah, and it seems as if it's like verbiage coming from a Fed president here, a Fed president there. So that's kind of why we're starting to see those fluctuations on the pullback. Definitely something we'll keep on our radar. Bitcoin hit all-time highs, which I think was just part of the Trump trade, and maybe we're seeing a little bit of a pullback there. Gold is still
well down,
sitting strong.
No, gold dropped. Money's coming out of gold. Take a look. I'll pull up a CNBC chart on gold really quick, and you'll see that it's pulled back significantly. Let me pull up this chart. It's coming up slowly. CNBC is not the fastest, but you can see if I take a look over here, this is a year. Let's look at about 6 months. Well, you can see even on the year chart that prices of gold had really gotten up to about what, 2,800 just, and now we're down at 2,580. So gold has pulled back, and a lot of money has flooded back into equities, but a lot of money has gone into these things like cryptos and things that had all but been diffused just a couple weeks ago.
Well, that's why we have these amazing options tools that we could take advantage of any of these pullbacks. And so, if you're not utilizing options premium selling to take advantage of these pullbacks, to hedge your portfolio, to utilize these innovative investing strategies into your portfolio, we happily invite you to join us here at the Trading Trader family. We've got some indicators. Go ahead and show some love on the YouTube, on our TikTok, on our Instagram. If you want to learn specifics on some of the strategies that we're going to be discussing and going over in the rest of the show, there's an awesome free workshop on this page as well. You can learn some information about what it takes to join the program. We've got one-on-one coaching if you need a little bit more hands-on training, and then obviously the website. And so we've got this awesome AJ's Quick Links page where everything lives. We've gone ahead and thrown that in the chat. We've got AJ's Pick of the Week. We've got some speed round. We've got maybe some bond talk, some corporate tax, whatever you're in the mood for, AJ. We're going to take a quick break to catch our breaths, and we'll be back in a few minutes. Sit tight, folks. If you have a name that you want us to run through, throw it in the chat. If we have time, we'll bring it up. Otherwise, sit tight. We'll be back in a jiffy.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So bonds. What should the average consumer be aware of what's going on in that part of the investment world?
Well, so a lot of folks have been coming to me asking, hey, how do I get an idea what's coming up in the future? And this is going to sound unusual because bonds typically are very boring, but I think you got to keep an eye on bond yields. So people have to remember that if there is a demand for bonds, if people want to buy bonds, then, if there's that demand on bonds, then the yields come down, right? Because people are willing to, they can sell the bonds to more people and they don't have to pay as high a yield in order to get the bonds sold, right? It's when the bonds sit there and nobody's buying them that the yield comes up until somebody will buy them, if that makes sense. Well, bond yields have been coming up, which means people are not as interested in buying bonds. And don't forget that the Fed is trying to sell their bonds, right? They're trying to get bonds off of their balance sheet. So that's adding to the fact that there's all these bonds available. And we were actually seeing a healthy amount of bond buying, and it was keeping yields low, but we've been watching these yields go up. And so you want to pay attention to if these bond yields continue to go up, because what that's going to tell us is that, hey, some of the new fiscal policy that's either being talked about or when January 20 rolls around gets deployed is actually, going to be counteractive or counteractive to the monetary policy that the Fed has set. So keep your eye on bond yields, because there's we were talking earlier about what are some of the actual structural things that can have an effect on the market. And so we're talking fiscal policy. This is the policy that comes from, the government, the fiscal policy, and then there's monetary policy that comes from the Fed. And the monetary policy and the fiscal policy were pretty much in alignment after the pandemic. But now with the new administration coming in, there's discussions of a whole new fiscal policy. So keep your eye on the bonds. If you see bond rates like the 10-year, the 5-year, the 3-year starting to rise, that's an issue of inflation, and it's a precursor to possibly a trend reversal in the big market. So you want to watch those bond rates. The other thing you want to watch is the corporate tax rate that ultimately gets decided. Right now, I believe it's around 21. I should know this because I pay it, but it's around 21, 22%, something like that. And, you'll see tweets and discussions with President-elect, prior President Trump talking about bringing it down to 15. I would imagine it's going to come down probably to 18%, but watch where that corporate tax rate winds up landing, because lowering that corporate tax rate means, a big chunk of money not coming in anymore, right? And that's going to increase the debt that the government has, especially also the other thing that this administration is talking about is renewing the tax deductions for wealthy folks, for businesses, things like that. And so if that gets renewed, that's another big deficit onto the market. And that more than likely, these things will go through, since the government has, the Congress as well as the president in the same party, the Republican Party. So you got to watch that corporate tax rate. You have to watch whether or not the tax deductions for the wealthy get renewed, because these are all going to add to our debt, add to the whole inflation picture. And that will also find out in the bonds. So for the next year, 2025, keep your eyes on bonds and keep your eyes on these particular news headlines, which I don't believe will get, the coverage. I think there'll be other things to distract us, but we want to pay attention to those news headlines. And then finally, if I bring back up my chart, I kind of foreshadowed it with our discussion before, but we want to watch where these various reversals happen. And you can tune into our show every week, because I keep, this retracement analysis is my bread and butter, but I like to watch where each confirmed reversal lands and measure it compared to the prior ones. It gives us major insights, but especially this next one, where it lands, whether it lands, like we talked about, around 5850, if it lands down here around 5700, or if it goes down below 5600, that's going to tell us how to invest moving forward. So I would keep your eyes, and you heard it here first, keep your eyes on bonds. What's the yield at? Is the yield going up? And if you can find graphs on free sites all over the place, but pay attention to bond yields, not the short-term bonds, but bonds like 3-year, 5-year, 10-year. Pay attention to a couple of news headlines. You want to pay attention to what the corporate tax rate is ultimately agreed on being. You want to pay attention also as to whether these tax cuts from 2016 that are set to expire get renewed. And finally, pay attention to the retracement analysis. And I hate to toot my own horn, but one of the easiest places to do that is to just tune in here, because we keep, anal track of where all these reversals happen on the S&P and on the VIX.
Have you any, like, as you're talking about the bond market and the tax rate, I kept thinking about this new government efficiency collective that Mr. Elon Musk and Vivek Ramaswamy are now are now a part of. And I'm just imagining it made me, it made me think of this this viral tweet. I don't know if you're familiar with this one, but this is the Argentinian president who's like basically he's just ripping off all the ministry hat. We don't need this department anymore. We don't need this department anymore. We don't need this department anymore. And so I don't know if you saw, but they're going to live tweet all of the removals or suggestions that they want to be more efficient and then get public feedback. Do you have any thoughts on that? Do you think, I mean, obviously some efficiency is good, but this is quite like a very dramatic, presentation of tearing down and restructuring the government. I just imagine that's going to have some impact on some sectors.
I have no comment. We'll see.
Nope. I just thought it was funny. All right, cool.
Yeah. No, it's funny. But it's funny if it wasn't reality. We'll see. It could be good. It could also totally backfire. So we'll see.
Well, the public sentiment, I think, is good, because if enough people disagree, we'll kind of know. But if it's like some middle ground, that is just the modern state of politics. Some people are going to be happy, some people aren't. The majority will have to win. But we'll keep an eye on that. It just makes for another interesting 4 years. You brought up 2016. I just remember every other tweet of something from Trump would be like China this, EVs that, and everyone in the market was like, "Oh, what should we do? What's he talking about?" And I don't think it's as extreme anymore, but that was like a lesson for us investors and like social media.
That's right. That's right. I'll be honest. Being an investor since the late '90s, I don't like chasing headlines. I like chasing solid information about whether or not a company or a sector is doing well or not. It was a very difficult time for us traders to trade during 2016 to 2020, because each tweet would send the market riling one way or another. And it had nothing to do with, what was actually the bones of the economy. So I'm not looking forward to that. Basically, always having headlines of things like that. But you know what? The beautiful part is if we can identify something, like for instance, in that period, what we did identify is that, ahead, because they would often announce that they were going to make an announcement. That's kind of the playbook. They would announce that there's a big announcement coming up next week. And so you would see in the options market that folks would immediately start buying options, just like they would ahead of an earnings event. And so the price of options would go up, and that became predictable. So ahead of these announcements, we would see a volatility rush. And then after the announcement, a lot of times, if you guys remember, and I know that there's a lot of amnesia about those 4 years, but what would happen after the announcements is those announcements usually were, very lacking in substance. And then you'd be like, oh, nothing really is changed. And so people would then sell the options. We would get a volatility crush, and that became the predictable pattern. So even in chaos, which, some people have been, talking about, they're like, the government doesn't work. We want to have some chaos. We want to stir things up. Great. Even in chaos, if we can identify what the predictable pattern is here at Trading Trainer, we could probably figure out how to profit from it. It's just something that takes more effort.
Yeah, and you don't even know which platform to believe anymore. Is it Instagram? Is it Twitter? Is it Truth? Which one's telling the truth? Et cetera, et cetera. So we're in for quite a ride. But like you said, we're always looking for an opportunity, whether it's to the downside, to the upside, to no side. One of the beautiful things that, I've learned since we've started working together is these 28 variations of option strategies that can be applied to any stock, a lot of different asset classes, a lot of different investment tools, ETFs, things like that. And so on this part of the
Yep.
show, we kind of get into AJ's brilliant mind and we see what he's looking at this week, and we let you guys know what his pick of the week is. And so, AJ, this week you're looking at a commodity play. This is a U.S. natural gas fund, ticker symbol
I know I'm
UNG.
going so boring. I'm going so boring on you guys. But yes, I'm looking at UNG, which is an ETF that basically tracks natural gas here in the US. So let me turn off, you guys can all download and use our indicators. I'm going to turn off a set and turn on a different set. The set I'm turning off are the ones that I use. That's the confirming indicator MA. I use that to look at the broad market, but now that I'm looking at an individual underlying symbol, I've changed it over to the confirming MACD. And I've got it set up using our FAST. So let's take a look. We're coming towards a nice bottom level here. We actually got a signal that there was going to be a bottom. Didn't quite get the follow through until maybe Wednesday of this week. But, a lot of people after that gap up didn't follow that follow through. And it looks like we're going to go for a double bottom here. But when we do have, and I've been telling, by the way, for those of you that aren't part of the Trading Trainer Premium Selling Program, I'm going to give you a heads up. One of the things we've been telling our program participants is to increase your confidence requirement on the signals you're getting to get into your initial, your initial covering symbol. So when we do premium selling SIP, we always have to have a covering trade in place. That's why we can do things like covered calls and covered puts. You get into an initial covering position that you often leave for weeks, if not months, and then you just do these selling of premium throughout the length of the overall trade. So you could sell premium 5 or 6 times on a initial covering position purchase. But what we've been telling our program participants for about 5 weeks now is make sure when you get into your covering position that you have way more confidence that that covering position is going to move in the direction you want it to than we typically want. So check off more boxes so that you feel, in the past we've talked about having like 60-70% confidence. Now we're talking about 70, 80, even 85% confidence before getting into that position. So that's why when we're talking about waiting for a bottom signal here on UNG, really wait for it and make sure that it is validated, confirmed, and that it has follow through before doing it. But when we get that very confident signal, I'm in the market to buy some of this UNG ETF. I'm going to be trying to get it down here at about $12.50. And actually, another thing that I can do if I want to buy this UNG, check this out. This is called using a cash secured put in order to buy a stock. So if you look over here, this is the option that's actually expiring today. So that option's all but done. I'm going to go to the option that is expiring next month on the 20th December. You see these strike prices, SIP? I basically decide how much I'm willing to buy a share of UNG for. If I'm willing to buy it for $13, great. Basically, what I do is I sell this cash secured put, and I have to have the $13 ready, but it's going to sit as cash in my account. And by going ahead and selling this, and I have that $13 ready, if I'm going to buy it, basically, they're going to give me 91 cents a share just for agreeing to purchase UNG at $13. So they're going to pay me right now if I agree to purchase UNG at $13. And somebody may come and say, okay, I'm going to sell AJ that stock at $13. And they have until the expiration date, that's December 20 in this case, to sell me UNG at $13. Whether they sell it to me or not, or whether December 20 comes and goes and the deal's off, I get to keep the 91 cents a share. So this would be a perfect opportunity. If $13 is what I'm willing to pay, if I'm only willing to pay $12, well, good. They won't give me as much. They're going to give me 48 cents. So they're going to pay me 48 cents today if I agree and I have the $12 to one side to purchase this anytime between now and December 20th for $12. It may never go through. They may decide nobody will be like, I don't want to sell it to him for $12. I still get to keep the 48 cents. Now, there's one caveat, and that is it's done in lots of 100. So it's not $12. You're going to wind up doing 100 shares for every contract you sell. So you're not going to get 48 cents. You're going to get $48. And it's not going to be $12. It's going to be $1,200. And it's not going to be one share. It's going to be 100 shares. But if you're willing to do 100 shares of purchasing and stuff like that, you pick the price you're willing to pay, and then they'll sell it to you. That's another way to do this is if you're willing to get in at $12, they'll pay you 48 cents right now, right here and then you just wait. Maybe you're not. Somebody will sell it to you for $12. Keep that 48 cents. If we get to December 20th and nobody sold it to you for $12, maybe you reevaluate and you ask them again for the next one, which is, I think, January 15th. And you could just keep collecting these premiums with the idea that you're going to buy this at 12 or 11, whatever price you're willing to pay. You keep collecting the premiums until somebody finally sells it to you at the price you're willing to pay. When I'm looking to buy stock, that's the only way that I buy stock. A lot of people don't know that you can pick your price and get paid for getting into the detail to paying that price. But that's how I might do this. I might go ahead and sell those options. And then once I'm in that covering position on UNG seems to like to spike all the way up to 14, 15. Even this last time around, it went up to about 16.75. When it hits those highs, that's when, once I'm in that initial covering position, which in this case is the stock, I could sell calls and then keep that premium coming, right? So UNG, and I've been in and out of UNG for like the last 25 years. It's been one of my candidates on my watch list that I come back to because it's such a reliable income generator. So there's the only other thing I would say for people who have bigger portfolios, UNG does sometimes have a liquidity. So it's better for people with smaller portfolios, like under $100,000. But UNG could really be a staple in your portfolio, and now looks like a good time to try to get into a covering position, buying some of that stock or using some of those cash secured puts to buy the stock at whatever price you choose. I'd be thinking about that now, and that's why I wanted to feature it this week.
Yeah, I also feel like seasonality really fits into what we
Right?
could expect the next 5 months or so. At least you never know with how certain winters might affect demand. And if we're kind of sitting at this low heading into the holiday season, think when it starts to get cold and the demand starts to increase, I mean, I'd love to see what UNG looks like on an annual. We don't got to do it now, but like if there is some validation to it, then this is a great setup. I mean, look at that.
Here's
that
a year
sweet,
ago.
sweet bottom. Look at that. I mean, that could
But
almost
also remember this, Sip, there's been a huge push in renewables, but that's created a big problem here in the United States. And the big problem here in the United States is that when you have renewables and the renewables turn off because solar turns off at night, wind turns off when the wind doesn't blow, when that happens, you have to have your base load taken care of. Coal's all but dead. I know that people have talked about bringing coal back, but coal's all but dead. Oil, oil is not the cleanest. All the newest power companies, their base load is being taken care of by natural gas. So natural gas isn't going anywhere, at least in the next, medium to long term. So it's a great ongoing ETF to be trading on, and that's why I featured it.
Yeah, I think last week we had EGO Gold. This week we've got the gas
Eldorado
ETF.
Gold.
So a lot of substance to the underlying assets heading into the new year and into the winter season. So AJ's pick of the week: U.S. Natural Gas Fund, ticker symbol UNG. All right, AJ, we've got 3 in the speed round. We're running a little short on time, so maybe we could, come up with some pretty quick breakdowns of each of these, because I know the people want to get your take on them. So let's go ahead and get into the speed round. We'll start with Sam in Atlanta, Georgia. Wants to know, this is a wild name or just very new to me. Your take on Simplified Volatility Premium ETF, ticker symbol SVOL.
Oh, this is a really, and I don't know somehow this tracks the volatility of the VIX. So it's like the VIX is a measure of volatility, implied volatility of the S&P 500, but then you can figure out the volatility of the volatility. This is an interesting one, and I like it because look at the pattern. It's sideways, choppy. I mean, there's been some pops and drops on basically these transient external stochastic shocks, but for the most part, I mean, if I look at the last year, this has stayed somewhere between 21 and 23 bucks. And I like that it's started to get a little bit on the, some extremes. I love when something is in a predictable range. The nerd term for that is range bound. I like things that are range bound, but that they oscillate from lows to highs and become predictable going to lows to highs, because I can profit off of those little intra-channel moves. So yeah, I'm digging this, and I see that you're seeing a top being formed. Let me come back to our usual 6 or 3 month chart here. I see this top that you're seeing. I want you to make sure you get some follow through on that. And let's take a look at the option chain. I can use this charting software. I like we're on a little crunch on time, so I won't pull up our options lookup tool, but our options lookup tool does this task very well. I was just looking again at liquidity. Liquidity doesn't look bad. Let me look at the March options. Again, I'm seeing a little bit in the bid-ask spread, which tells me that liquidity is kind of question. Probably, again, if you have a bigger portfolio, like you're dealing with hundreds of thousands of dollars, you might find a better symbol than this. But if you're dealing with smaller portfolios, you might find some solace in this. So what you would want to do here is either short the stock. I didn't see, let me come back over here really quick and look at these options maybe expiring in June and go very deep in the money. Bid-ask spread. Actually, you might find yourself a substitute put option if you'd rather have a cash trade. So either you're going to short this ETF, or you're going to buy a deep in the money, far out in time put option. If you have access to our options lookup tool, that makes finding a substitute option absolutely easy. Use the options lookup tool. You're going to do one of those two things once you get a confirmed, top signal here. And again, like I said with earlier in the show, make sure you're extra confident that that signal is what it says. Meaning, if you get that top signal and you short this stock, or you buy that back month deep in the money put option, that you get at least 50 cents, if not $1.50 of movement down before you go any before we, you want to make sure that happens. You want to feel 80%, 85% confidence that that's going to happen before you pull the trigger on that trade. And then you're set up. You're set up for selling puts, buying protective calls, cycling it, creating income out of this. And I think that this might be a good ETF to do that too. I'm going to look at it closer offline, but thanks for bringing this one to my attention. It might be something that I add to my watch list as well.
Yeah, Simplify Volatility
So
Premium
ETF.
Ticker
I'm going to
symbol
have to do some research on these guys who brought this one. SVOL for sure.
All right, thanks for that, Sam. I'm interested in this next name, and I think a lot of the viewers and just investors across America and the world. Jeff from Trenton, New Jersey wants to know, AJ, what do you think about Trump Media and Technology Group, ticker symbol DGT, which, I don't know how many shares of a publicly traded company you can own and be president. Maybe you have a little bit more history background than I do, but that might be a new one, right?
So not something that's in my portfolio. However, let's look at it. The reason why it's not in my portfolio, not because I have any bias. I actually, when it comes to this kind of politics stuff, don't even care. It's something that is in the news, and that's what I do care about, because again, if it's hitting in the news, and it's just the fact that Donald J. Trump is in the news. So by default, this particular candidate will be in the news because you can't separate them. And so if it's in the news, it makes it very difficult to analyze and predict, because the news inserts all sorts of external buying and selling pressures on something. So you can't get those organic patterns to repeat, because it's just a matter of what's in the news. So that's the reason why I shy away from this. It looks like just from the pattern that there was a run up in price. And I bet if we looked at order flow from the beginning of September, I wouldn't be surprised if you actually saw that in the beginning, in September, you saw some big market movers, people that had big wallets, starting the momentum of buying. And it actually caused the ball rolling, along with some of the news headlines, to get, entice outside money in. Because it looks like, looking at order flow, that the ball started rolling because market movers started buying, but then the big run up in price, especially right up to the election, was outside external money. And now I'm seeing that order flow, meaning the big market movers who put their money back in September are taking their money out up here at this higher price. And, the price that these folks who came in from externally, they probably paid anywhere from 25 up to 45. They may, if they're not selling, they may be left holding the bag at that higher price. But it looks like this one's got a trend reversal. So if anything, I would probably be shorting DJT right now. I would probably be shorting or buying some put options against DJT, and I would go 3 to 6 months out and probably at least 2 or 3 strike prices in the money on that. And then I would probably look for around $20 to $15 where it had gotten to before this order flow. I almost feel like, based on looking at how the money flew into this and now how the money's exiting, I think where DJT stock was around the end of August is probably where fundamentally it will be, around the $15 to $20 mark. So I would actually short it here, and I would expect to probably double my money on a shorted trade before looking to exit. So I would put almost like 50 to 100% profit target, and then use a trailing stop to get out.
Yeah, this is very interesting because one, the name is Trump Media and Technology Group, but the real essence of the business is the Truth Social app, which the only person I ever see using Truth Social app is Donald Trump. Like you never see anybody else using it, or so it's like, and they don't necessarily make a lot of money. So there's a lot of
I mean,
external stochastic involved in this play right here for sure.
absolutely. Absolutely. In fact, don't most headlines come out of X now, Elon Musk's X? Where
There's
did
a whole
did
there's a
where did
whole debate on
RFK
that.
just where did RFK just make his announcement about
Yeah,
gutting the
X,
FDA? Was that
X.
X? Yeah.
Yeah, that's like it's becoming the bro channel. The right because that's like where um all the Trump voters, or at least came. That's the debate where it's like the traditional media versus like the new media, and X being like the one that's geared towards, I don't know, Gen Z, millennial,
Mhm.
white males, etc., whatever those target demos are. So there you go, Jeff.
Short your DJT, and if you're in DJT, get out and do the opposite trade. I
We'll,
would
we'll
try to get out at a profit if you can, because otherwise these market movers are going to leave you hanging.
we'll bring this up again maybe in the new year just to see where things leveled off after the inauguration. All right, one final name to close the show out. Deb in Boise, Idaho wants to know, retailer, we got the holiday season coming up. She wants to know your take on Macy's, ticker symbol M.
Ah, my wife is looking for. We have a at our we have a bar that we just got renovated. Sip, we're going to have you over onto the East Coast. We had a very nice bar put together, and she's looking for bar stools, and she actually found some really quality ones of all places at Macy's. So I'm looking at the chart, and guess what I see coming up? I see Macy's doing some earnings. I think, for the most part, earnings season is behind us, but there are a few retailers still coming up. Uh, I think you ought to think about our calendar spread. Macy's, I see a run up and then a drop in price. Over here, not much difference. What I would do, I could actually even see taking advantage of the volatility rush starting today, meaning if you buy some options, and you'd have to look at your implied volatilities, but I bet if you bought some options now, you could sell them a day or two before earnings is released and get a profit on that, and then do maybe a calendar spread on the day before and make double the profits. Macy's is queued up for earnings trades. Do earnings trades.
And even if the earnings are bad, if their statements could be forward looking. Oh, we're feeling optimistic about the upcoming season. Da 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 da. We're going to be doing these Black Friday, Cyber Monday initiatives. Like it's interesting timing for where Macy's is in like the cycle of their company. So yeah, retailers, probably we'll see how the consumer looks in the next earnings
My
cycle
wife
from
is going to
Macy's.
keep Macy's afloat. So nobody, but just like I was just noticing, I've got my favorite hat on from Dan Passarelli, who's been a guest on our show a couple times. Volatility equals opportunity. Macy's, volatility equals opportunity. You could play this both ways. I think you've got something here.
All right. Well, that's pretty much a wrap on the show there, AJ. Thank you for taking some time out of your schedule. You're on the move, but still always able to hop in, communicate with the community, give some advice, answer some questions. And that's the
Absolutely.
beauty of the premium selling program and the strategies, is that you're not hunkered in front of your day trading station all day, getting
No.
all
On
stressed
the
out.
go.
You're
On the go.
living life, checking on things, and it sounds like the community itself, supports one another. And so, if anyone's interested in becoming a member, joining the Trading Trader community, we've got AJ's quick links. We're gonna I'll go ahead and throw the link to this once again in the chat. But here's all your good stuff. You got AJ's free indicator, links to the social pages. If you want to learn more about the premium selling, register for the workshop, learn about the overall trading trainer program, the one-on-one coaching, a lot of good stuff here. Keep us posted on your journey. If anyone watching, tuning in for the first time is interested in following along, hop on those social pages, hit that like, hit that subscribe, hit that follow button. We truly do appreciate it. If you have any questions on any of the stuff that we talked about, feel free to leave a comment, send us a DM, head on over to trainingtrainer.com. The contact section, someone should be able to help you there. Otherwise, AJ, heading into the weekend, we're taking our profits, and next week we'll be, looking at the opportunities to close the month out.
Absolutely. Today is options expiration day for November, so we'll be released from all of our obligations for any options we've sold. So it's time to start thinking about December.
All right, folks. AJ, thank you for your time. Thank you, everybody, for tuning in. We'll catch you next week. Adios.
Adios, everyone. Bye.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.